Hey guys, Bill Soriano from Pittsburgh, Pennsylvania, and I wanted to do this video here because I dropped a IMarketsLive harmonic scanner signal into the group earlier, I think last night or sometime this morning, I can't remember. But I wanted to explain a little bit about how you're supposed to take the harmonic scanner trade. So I want to make a quick video for you. So this is the trade. This is the 1 hour chart of EUR USD, and the harmonic web scanner here identified a shark pattern here. As you can see the whole pattern here, it's a shark pattern. And so what you're seeing here is that EU, I'm going to call it EU for short, it made a strong move up. Each one of these bars is 1 hour. I'm going to try to make this a little bit bigger for you if I can here. Let's see. And I probably, there we go. So now what we're seeing here is that it made the move up into the first entry zone, went through that into the second entry zone, and so a lot of people will just take the trade. So this is obviously a sell on EUR USD, since it's identifying a reversal here. A lot of people will take the trade when it first moves into the entry zone. You don't want to do that, and this is why you don't want to do it, because it may just keep going. Okay, so as you see here, it goes into the first one, into the second entry zone here, and then here's your stop loss right here. And actually now it moved into there, and then it made a move forward. So I always look for it to make this move in the direction that you want it to go, and then I look for a pullback. Okay, so that's exactly what we got here. It made a move to here, and then it pulled back. And then look what happens. It's pulled back, and right now it's actually gone through the stop loss. So if you would have taken this trade in the entry zone here without waiting, you would have had a stop loss of almost 100 pips that you would have lost. We don't want to risk 100 pips, 100 pips. That's too many pips to risk, and it limits the lot size that we can take when we risk 100 pips. We want to risk around 20, 30, 40, maybe 50 pips at the most on these trades. So see here now, what I look for is I look for it to move in the direction I want it to go, and then I look for a pullback, and then I look for it to come back and cross this area here. Okay, so what I did was I put a sell stop order in when it crosses this area right about here, and then I'll enter the trade. So let me go over, and then you see here we still have all the take profit. Take profit 1, take profit 2, take profit 3. This currency here, if it does drop down through here, it should drop all the way down to this 1.16624 area. Okay, so that's almost probably 300 pips there. So we want to try to get 100 to 150 pips on this if we're going to risk about 40 or 50. So let me just take you over to my charts here on MT4 so you can see what I mean. So this is the same currency, EUR USD, 1 hour chart. And this is how I told you it moved up into the entry zone. It came down and it stopped right here. And you see, this is where I have my sell stop order in right here, right at this area here. So if we bring this over here, it's right at 1.19138. So when this currency, and you can see here that now it's gone all the way up through where my stop is going to be. Okay. So once this trade gets executed, I already put my stop loss in up at this swing high right here. Okay. So I only have to risk, if I do get in this trade, I'll only be risking about 43 pips. It usually shows up there for me. If we do this, it's about 46 pips. Okay. So I'm going to risk about 46 pips, and I want to get at least 100 out of this trade. So I'm looking for it to drop down here. And once it goes through this area here, my order will execute. And then I'm looking for it to drop all the way down. You see here, this is my chart, and I also have my own trade setup here that I have on here, and you can see these arrows here, um, which are also showing me that this is going to drop, soon. These two arrows here, and then I also have my Robbie DSS indicator here, which is it's a blend of exponential moving averages and the stochastic indicator. So it's like the stochastic, and it gives you an overbought and an oversold level, an 80 and a 20. It also gives you these blue and red dots. So the blue dots are obviously when the currency is moving up, and the red dots are what you look for when it's moving down. So I'm going to do a whole video soon on my whole strategy and my whole chart setup that I use to take trades. Right now, this is a trade with the Harmonic scanner, the IMarketsLive Harmonic scanner. So this is a free trade for you guys here, a free trading signal for you guys that are in my group, Forex Trading Authority. And remember, if you do take this trade, remember, if you're brand new, you should be on your demo account for at least 2 to 3 weeks. And if you are using your live account, you want to make sure you use good money management. You don't risk any more than 3% of your live account on any one trade. So if you have $1,000 in your account, that means you can't risk more than $30 on any one trade. Okay. So make sure you're setting your stop loss just like you see I have set. So if I walk away from the computer or my phone and I get in this trade, my stop loss is already set. Okay. Now I don't have a take profit set because I want to see how that goes. I want to get the most that I can out of this trade. So this is the free signal for you guys in the group, Forex Trading Authority. It's a harmonic scanner signal for EUR USD. And like I said, I would not get in this until it drops down through this area right here. Then then if you want to, you can take the signal. So it's Bill Soriano from Pittsburgh. Make it a great day trading Forex.